The fifth learning objective is to apply the lower of cost or market rule to inventory. In addition to the FIFO, LIFO, and average cost methods, accountants face other inventory issues, such as the lower of cost or market rule, abbreviated LCM. Lower of cost or market rule shows accounting conservatism in action and requires that inventory be reported in the financial statements at whatever is lower, the historical cost of the inventory or the market value of the inventory. For inventories, market value generally means current replacement cost. That is, the cost to replace the inventory on hand. If the replacement cost of inventory is less than its historical cost, the business must write down the inventory value. On the balance sheet, the business reports ending inventory as its LCM value. The entry to write down the inventory to LCM includes a debit to cost of goods sold and a credit to inventory. Problem 628A demonstrates the lower of cost or market rule. Some of M&T Electronics merchandise is gathering dust. It is now December 31st, 2012, and the current replacement cost of the ending inventory is $20,000, below the business's cost of goods sold, which was $100,000. Before any adjustments at the end of the period, the company's cost of goods sold account has a balance of $410. We need to journalize the required entries. At what amount should the company report inventory on the balance sheet? At what amount should the company report cost of goods sold? And which accounting principle or concept is most relevant in this situation? To journalize the entries, we would debit cost of goods sold for $20,000 and credit inventory for $20,000. M&T should report inventory on the balance sheet at $80,000. That was the balance before minus the $20,000. At what amount should the company report for the cost of goods sold? M&T should report cost of goods sold on the income statement at $430. Which accounting principle? And that is conservatism. The goal of conservatism is to report realistic figures.